Good morning and welcome. You're watching Market Cafe on ET now. Let's quickly take you through all that's happening in global markets as well as on the domestic front in business news as well as specific corporate announcements coming through. Ankita and me will take you through all of that over the next hour or so. Good morning, Ankita.
Good morning, Harsh.
Right, we take you through what's happening in global markets first up. Ankita, talk to us. What's happening?
So Harsh, today is the last day of the month and then we start with 1st of June on tomorrow. But the US markets were pretty directionless yesterday because the debt ceiling talks are still underway and, traders are really waiting and watching out for it. So the markets were pretty mixed and directionless yesterday. So yesterday the US markets closed mixed as the traders are still awaiting the debt ceiling progress. Dow was down 50 points, Nasdaq Composite was up 0.3% and S&P 500 was absolutely flat in trade. The energy stocks fell yesterday as the oil declined. Oil declined a good 3 to 4% in trade, and Harsh will be taking you through that. But the consumer confidence data also that came out yesterday from the US markets came in above the expectations for May with a reading of 102.3 versus the 99 estimates. Now for the month, like I mentioned, it is the last day of the month. So for the month, Nasdaq is nearly up 6.5%, S&P 500 is up about 0.9%, and Dow has fallen 3.1%. The Dow is bucking the trend, down 3% in trade for the month. Let's look at the European markets. The European markets also closed lower as US lawmakers are now preparing for the debt ceiling vote. DAX was down 0.2%, FTSE was down 1.3%, and Stock 600 down 0.9% with most of the sectors and major bourses in the negative territory. So a mixed global handover. I would rather say it's a negative handover that's coming in, rather directionless since the markets are really waiting and watching out for the debt ceiling and negotiations. So Harsh, your mix back there, but oil was, saw a big move yesterday. Tell us what happened.
Right. A couple of things again working with oil. One is, of course, the US debt ceiling. That particular piece of global news still, making investors nervous, including those in the oil industry. And therefore, you've seen WTI fall below that $70 a barrel number, which is a bit surprising as well, given the fact that there was supposed to be a resolution on the US debt ceiling, but that doesn't seem to have happened fully. And that, does make markets jittery as well. The other piece that's coinciding with this particular piece is that we also have the OPEC Plus meeting slated for the 4th of June. So when you have that, and when you have the Saudi minister commenting on a possible production cut, and then you have Russia suggesting that there won't be a production cut. So that piece also is leaving markets hanging, if I can term it as that. And that's what oil is currently facing. We're seeing WTI below the $70 a barrel mark. I did mention that. And Brent just below $74 a barrel. So currently, that's where oil has steadied. Slight bit of gains in early trade today for oil, but yesterday, really 3 to 4% lower where oil prices are concerned.
All right, then oil down 4% in trade. Let's quickly look at what are the events that are making news or that we need to keep a track of. Back in India, we have the India GDP numbers and the India fiscal deficit number that will be coming out today. We also have the China composite, China manufacturing and non-manufacturing PMIs that is going to come out, and that's something everyone will be watching out for. Back in India, in the corporate action, we have Rajesh Gopinathan, who is the CEO of TCS, will be stepping down finally today, and that is something that the whole street will be looking out for. We also have SBI that will be turning ex-dividend today. And Macrotech developers that today is the ex-date for the bonus issue, and the bonus issue will be in the ratio of 1:1. Also, to be eligible for dividend for Aptech, Shree Cement and Trident, today will be the last day. And in terms of other events that we need to keep a track of, we have the MSCI reject that is scheduled for today, and we will be bringing out the details to you very soon. And we have the European Union and the US Trade and Technology Council meet that will take place. We also have the NATO foreign ministers on the meet is going on, and today will be the second day of this meeting. And we have the new policy of digital leaders app that will be released as of today. A whole host of events that are likely to take place. But Ash, what is the news that made headlines overnight?
Always the debt ceiling over the last week or so, Ankita. So I'll go straight to it. Kevin McCarthy urged members of his party to support a bipartisan deal to lift the $31.5 trillion US debt ceiling. Mind you, there are some Republicans who are still sitting on the fence undecided. So that's probably the reason why that's coming through. But both Democrats and Republicans have predicted they will get enough votes to pass it into law before 5th of June. Do remember, the legislation would reduce the spending from current projections by $1.5 trillion over the next 10 years, starting 2024. Not just that, the Congressional Budget Office has also said that the measure, if enacted into law, would reduce interest on the public debt by $188 billion.
And in some worrying news, global investment firm Goldman Sachs is preparing for a third round of layoffs. The company is expected to trim as many as 250 jobs over the coming weeks. Goldman Sachs was among the first few companies to cut jobs in September last year, followed by over 3,000 cuts in January.
Well, let's switch over to specific news. Twitter is now worth just 1/3 of what Elon Musk paid for the social media platform, according to Fidelity. Fidelity Fund has marked down the value of social media platform Twitter for the third time since Musk's $44 billion takeover in October last year. Fidelity Blue Chip Growth Fund stake in Twitter was valued at nearly $6.5 million as of April 28th versus the $7.8 million as of January the 31st and $8.6 million at the end of November.
And staying with the news flow on, the Tesla chief Elon Musk kicked off his high-stakes visit to China for a meeting with the country's foreign minister. This marks the return of the EV maker to their largest production hub after as many as 3 years. Both Musk and Quinn Gang discussed that China was in fact committed to improving business for investors, including players like Tesla. Musk also said he was willing to expand business in China and opposed a decoupling of the US and China economies.
Right, and on to news flow on the stock that the street has been eyeing very closely over the past 1 week. Chipmaker nvidia, the company briefly joined an elite club of US companies sporting a $1 trillion market cap as investors pile into the chipmaker that has become one of the biggest winners of the AI boom. The stock's value has tripled in less than 8 months, reflecting the surge in interest in AI.
Well, as the Modi government completes 9 years of being in power, the BJP is in a celebration mode. The party has planned a month-long campaign to celebrate the 9th anniversary with various Mass Connect programs, with Modi himself scheduled to address a rally in Ajmer tomorrow. And while in these 9 years the government has achieved several milestones, there is still much to be done. The country may reward BJP based on this report card in the coming general elections. So, what are the hits and the misses of this government? We had a conversation with Madhava Narayanan, who's a senior journalist, K. Yatish Rajawat, who's the founder Center for Innovation in Public Policy, Partha Sen, who's the professor emeritus of Delhi School of Economics. Listen in to what these experts had to say.
IBC is certainly not a hit. I mean, let's look back a little because we are looking at the Modi government and particularly from 2016. But I would like you to take a look at the progress in IT through the decades, not just in IT exports, but also in central government agencies like the Center for Development of Advanced Computing and the National Informatics Center. So India's IT e-governance story, if I may say so, is a continuing story. Even mobile wallets were being planned and thought of before the Modi government took off. So to its credit, they have accelerated and advertised and boosted and evangelized these things to that extent.
What I have studied and what I have learned in the last few years is that you need systems and the systems need to operate, and those systems need to then operate in the benefit of larger public good. And that is only possible if there is efficiency in tax collection, and second, there is effective utilization of government resources.
GST, for instance, clearly needed to be done. We needed a single market. You couldn't have trucks waiting outside states just because they had crossed the state border for paperwork. But one has to go into these things with your eyes open, because see, if you are going to move from direct taxes towards indirect taxes, then you have five slabs of taxes, 6 slabs of taxes. Now, that's not how a GST works.
Right. Let's quickly move on though. A big day on the macro front today as we look out for India's Q4 GDP data. Economists expect a sustained recovery in the last quarter of FY23. We even had the RBI governor call that out. What are the factors driving the growth momentum? We have Anisha joining us with all of those details. Anisha.
Well, the recent bullish commentary coming in from the RBI governor has definitely increased the expectations from the Q4 FY23 GDP. The street is penciling in a number of anywhere between 4.5% to 5% as far as Q4 FY23 is concerned, and that's because we saw a decent bounce back, whether it comes to consumption, whether you look at the other high frequency indicators in terms of toll collection, tax collection, GST, etc. They're all pointing to the fact that there has been a sharp rebound in terms of manufacturing as far as the services industries is concerned as well, and all of this augurs well for the GDP growth of the country. RBI governor was of course on record saying that he wouldn't be surprised if in FY23 we saw a GDP growth of over 7%, and if you go by the run rate, that would mean that Q4 could entail a number of around 4.7 to anywhere between 5.2% as well. So overall the expectations are quite high. The number for FY24 that the street is talking about for GDP still is at around 6.5%. Recently we have seen a couple of upgrades also come by for the GDP forecast. So let's see what the exact outcome is, but for now the expectations are quite elevated.
And well, with that, it's time for us to slip into a short break. But before that,
Welcome back. You're watching Market Cafe on ET Now. Let's quickly take you now through what Asian markets are up to in early trade. We're seeing the Shanghai, which is down around 1/3%. Mind you, the China manufacturing has actually slid for a second month in a row, so that may be a bit of a concern and a bit of an overhang there. But let's quickly move on to the Hang Seng, which is down over 1% in early trade. In fact, over 1.5% lower in early trade is where the Hang Seng is currently at. Let's look at some of the other indices as well. We're looking at the Nikkei, which is down around 4/5% or so. We're seeing the ASX 200 also, or rather the Kospi up around 1/4%, and we're seeing the ASX 200 also down around 1% or thereabouts. So currently largely negative cues coming out from Asia. The SGX Nifty also down around 1/4%. So across the board, we're seeing a slightly negative start at the moment. the SGX Nifty indicating a slight negative bias as we start off. Welcome back. You're watching Market Cafe on ET. Now on to some specific corporate news on the India front. Adani Ports has reported a 2.5% rise year on year in the net profit for the March quarter to 1141 crore. Meanwhile, revenue increased by 40% year on year to around 5,800 crore, just a shade below that in fact. And we're looking at EBITDA, which increased nearly 60% to 3271 crore. So definitely margin accretive there for Adani Ports. Let's quickly move on to the consol numbers. Revenue just below that 5800 crore mark versus 4141 crore, 40% higher, and net profit at 1141 crore versus the 1112 crore number, which is up by around 2.5% or thereabouts. Those are the numbers, headline numbers for Adani Ports in focus today.
That's right, Harsh. Adani Ports will be in focus today, but with that, Apollo Hospitals will also be focused as it reported a weak set of Q4 numbers. Meanwhile, healthcare services revenue are up 18.5% on a year-on-year basis at 2,200 crores. My colleague Shrishti is joining in with more number crunching on this. Take it away, Shrishti.
Well, not a great set by Apollo Hospitals this time around because the street was building in for a good set of numbers by the company, but the company has disappointed, especially onto the margin as well as the profit figure, wherein this time the revenue was marginally lower than what we were expecting at ET. Now 4,302 crores is what the company reported in the top line, but look at the margins versus our expectation of 12%. The company reported a margin of 11.3%, and versus the expectation of 195 crores of profit, 145 crores is what the company reported onto the bottom line. And on the back of the disappointment, we did see the stock tanking post the numbers were declared. But let's talk about the internal. So the biggest drag this time around continues to be 24/7 as well as Apollo Health and Lifestyle Limited. If we talk about the hospital business, so a steady performance over there where we have seen the revenue jump of 18% on a YOY basis. The company says that they are on track for 2,000 bed additions with over rupees 3,000 crores in the next 4 years in key metros. But talking about the Apollo AHLL segment, that continues to report loss of 23 crores for the quarter gone by. The same story for Apollo Health Co, where the loss has been reported at 89 crores. So they have been the biggest drag this time around. Even their pharmacy business, the expectation was 1,900 crores, 1,800 crores what the company delivered. So not a great set by Apollo Hospitals this time around.
Not a great set, but Apollo in focus on the back of that. Let's quickly move on. The Tatas have created a war chest for its greenfield electronic component and contract manufacturing business through Tata Electronics. Latest disclosures by the company show that it has lined up funds of over 7,600 crore through a mix of capital infusion by the parent and secured loans. Tata Sons has infused about 610 crore in the company in FY23, the highest in a financial year, taking the total capital infusion to more than 1,800 crore in the past 3 years.
And in more deal buzz for the HDFC Group, the bank is set to acquire 1.6% stake in HDFC Life from its UK-based joint venture partner. Now, the purchase is aimed at making the insurer a subsidiary of the bank. HDFC Bank will buy the stake from ABRDN. In 2006, formerly known as Standard Life Aberdeen, its original joint venture partner that will now completely exit from the company. This expands the list of blue chip private sector lenders that want controlling stakes in their insurance businesses. Now remember, just a few days ago, ICICI Bank's board had approved raising stake in the insurance business of ICICI Lombard. So clearly the stock is going to be in focus today.
Right, Ankita, those insurance companies in focus over the last week or so.
That's correct.
And of course, the HDFC Bank and the HDFC Limited merger also on the card. So with that, this development will be a positive both for the insurance sector as a whole as well as for the HDFC Group. But with that, we'll slip into a short break. More on the other side, of course, so do stay tuned.
Welcome back here watching Market Cafe, and it is that time of the show where we get you all the stock specific in action, and for that we have Vamakshi and Shesha in the studio with us. But first up, Shesha, tell us what are the stocks to keep out on our radars for the trading session today?
Hi, good morning. So last few days of earnings season, so we have a whole host of counters and focus today on the back of results. First up, let's start with Insecticides India. It reported weak set of numbers. Although revenues have grown by about 8% on a year-on-year basis, a company has reported a loss on the bottom line. Losses come in at 29 crores versus a profit of 22 crores that the company had reported same time last year. So weak set of numbers, and on the back of that, Insecticides India will be in focus today. Moving on to Lemon Tree, strong set of numbers. Revenues came in at 253 crores, which is an uptick of 111% on a year-on-year basis. Company has reported a profit this quarter versus a loss that the company reported same time last year. Moving on to All Cargo Logistics, and this one is in focus on the back of the operational updates for the month of April that the company has come out with, where LCL volumes have declined by about 10% in the month of April, and as compared to March, they are down nearly 2%. Meanwhile, FCL volumes have also declined. So weak set of operational updates that have come in, and All Cargo Logistics will also be in focus on the back of this news. Moving on to Kirloskar Electric then, strong set of numbers, revenues up 38% on a year-on-year basis. Company has reported EBITDA profit of 17 crores versus an EBITDA loss of 29 crores that the company reported same time last year. Strong set of numbers, Kirloskar Electric on the back of this will be in focus today. Lastly, Torrent Pharma will also be in focus yet again on the back of results. It has reported a very strong set of numbers. Revenues up 17%. Company has reported a profit of 287 crores versus a loss of 118 crores that the company had reported same time last year. Meanwhile, margins have also expanded this quarter. Company has reported margins at 29.2% versus 26% same time last year. Strong set of numbers. On the back of that, Torrent Pharma will also be in focus today.
Right, thanks so much for that, Ashesha. We'll quickly move on. Vamakshi is here with us as well. Good morning, Vamakshi. You've been going through all the brokerage notes. Talk to us about the ones that have hit your eye.
Well, absolutely. Very good morning to all of you all. Let's first start off with JK Cement. We have a note that is coming in from Jefferies, and they believe that the volume growth is expected to be driven by the new central capacity that the company has. Energy costs are also expected to ease over the next few quarters. The company does have very strong growth prospects in their opinion, but they believe that the valuations as of now at the current market price are not appearing to be quite compelling. So on the back of that, Jefferies has actually downgraded their rating on this counter from buy to hold, but nevertheless, they've hiked the target price by 60 rupees per share to 3,260 per share. Other than that, watch out for PB Fintech. We have a note that is coming in from Citi. Well, the upbeat stance on growth was retained by them. Higher conversion rates are being supported by effective execution of the offline strategy, newer product segments, as well as the market development. They also witness an improvement in margins, and this is likely to continue going ahead as well. Improving and analytics-based engines are also expected to drive higher quality of business origination. So given all these factors, Citi has actually maintained a buy rating on PB Fintech with a target price of 820 per share. And lastly, keep an eye out on Torrent Pharma. We have a note coming in from Bank of America. They believe that the company posted a good quarter, and in fact it was a very good wrap up for FY24. There was a good growth seen in the branded market, and the US as well as Germany market saw a turnaround. Margins are also continuing to trend upwards. The valuations, however, are in line with peers despite posting higher margins as well as a good capital allocation track record. So given all these factors, Bank of America has maintained a buy rating on Torrent Pharma with a target price of 1,900 per share.
All right, thank you so much for those details, Vamakshi, and we'll move on. Coal India is another stock that will be in focus today, as Coal India board has approved an 8% hike in the prices of high-grade coal, ranging from G2 to G10. This is the first major price hike taken since January 2018, and Ashesha is here with more details on that. Ashesha, take us through all these details.
Well, yes, Coal India will be in focus today, and as you mentioned, it is the first major price hike that the company has undertaken since January 2018. They've hiked prices for grade G2 to G10 non-coking coal prices by about 8%, and this price hike impacts about 30% of the company's total volumes. The company has also said that this will increase company's revenues by about 2,700 crores in FY24. Important to note that company had undertaken wage hike earlier this year, because of which company's expenses were to rise by about 6,000 crores. Now that this price hike has come through, it will compensate for about 50% of the wage bill increase that the company was to face in FY24. Analysts do believe that we will not see these kind of price hikes anytime soon. One, because election is around the corner, and also because of inflationary environment that we are facing. Apart from that, e-auction premiums, remember, are off from the recent highs, but e-auction volumes continue to rise, and perhaps that could be a positive for the stock in the medium term. High sales via auction sales, of course, will help in aiding profitability from the company. We have a couple of brokerage notes that have come in. First up, Motilal Oswal believes that valuations of Coal India are pretty attractive. They believe coal is well placed to capitalize on the growth opportunity going forward. Nuvama has also come out with a note where they believe that hike is much needed, especially after the 19% wage hike that the company had undertaken earlier this year. So positive coming in, but important to note that this price hike is a negative for consumers of coal. Although steel will be not as much impacted, power we'll see limited impact on power as well, but aluminium and cement companies will be impacted because of this price hike that has come through.
Right. Couple of impact points there with regard to this particular news story. Thanks so much for breaking that down for us, Ashesha. Let me quickly move on though. Another sector that's in focus over the last 6 odd months is the MFI sector. With easing regulatory norms, that's given a fillip to the demand in the MFI space, and that's evident even from stock performance, right? You have the likes of Credit Access, Fusion Micro, Spandana, all of which have been buzzing year to date. So we have Vamakshi here who's going to break down that particular piece for us. Vamakshi.
Well, yes, the microfinance sector as a whole has been in focus. When you look at the returns that the stocks have posted on a year-to-date basis, very strong returns, with most listed players posting strong double-digit returns from the beginning of the year. In fact, Credit Access, Grameen as well as Fusion have risen over 30% on a year-to-date basis, and rightly so, because FY23 has been nothing short of a dream run for most of these counters. Now, as per a Sadhan report that just came out, the microfinance sector has reported a 21% growth in FY23, and most listed players, as you can see, have outperformed the overall industry growth that was led mainly by Fusion Microfinance, posting a nearly 37% growth as far as its AUM is concerned. The other players as well have posted more than 20% growth in the AUM. And not just that, NBFC MFIs have actually managed to gain market share at the cost of banks. Now, since the onset of COVID-19, we do have observed that banks' market share has steadily declined in the MFI segment. NBFC MFIs now have the most meaningful share, and in fact, the trend is actually showing that growth is actually leaning towards the NBFCs. And not just that, with cleaner balance sheets, the asset qualities for most discounters have also seen a very good improvement, with Spandana Spurti especially in focus, a very sharp improvement coming in over here on a sequential basis. The GNPA has declined from 5.31% to 2.07%. The other counters are also marking an improvement in the asset quality on a sequential basis as well. And not just that, we do have the growth outlook that has come in for most of these counters. Stellar set is what the companies have posted in FY24, and the expectation is the same going ahead into FY24 as well. Spandana Spurti is expecting their AUM to reach 11,500 by FY24, a growth of almost 35% is what they're targeting on a year-on-year basis. Credit Access Grameen is also expecting a loan growth anywhere between 24 to 25%, while Fusion Microfinance does not see any challenge to its AUM growth. Satin Credit Care, on the other hand, is also expecting an AUM growth of almost 25% plus. So largely a good set of numbers that the company has reported. A good growth outlook as well as improvement in the asset quality is the reason why the microfinance sector is buzzing.
All right, then thank you so much for all those details, Vamakshi. With that, let's shift focus that the markets will be tracking this week, the MSCI REIT for the month of May. Which stocks are on the radar and what are the changes? Well, my colleague Somit is here to break down all that data for us in terms of the flows and volumes. Take it away, Somit.
Well, the MSCI changes were announced earlier, but the adjustment date for those changes will happen tomorrow, which means that the inflows and outflows for the stocks which have been included, excluded, or the weightages have increased will happen tomorrow in trade. Now, according to Nuvama, the net inflow in India could be around $500 million US. Stock specific, if you see, Max Healthcare is one stock that has been included in the MSCI index, because of which there could be inflows to the tune of around $300 million US, which is nearly 9 times its 20-day average volume. Apart from that, there is Hindustan Aeronautics and Sona BLW, which would see an inflow of close to 170 to 196 million US dollars, and Adani Transmission, Adani Total Gas, and Industars. Now, these 3 stocks were excluded from the index, because of which there could be outflows in the range of around 84 to 189 million US dollars, which is nearly 5 to 10 times its 20-day average volume. Now, Kotak Mahindra Bank, that stock would remain in focus because the weightage of that stock has increased in the MSCI index, because of which there could be inflows of close to 800 million US dollars, which is nearly 8 times its 20-day average volume. Apart from that, there is ONGC, Ultratech, Indigo, and TPC Power Grid. Now, these are few names which would also see inflows in the range of around 50 to 71 million US dollars, which is nearly 2 to 8 times that 20-day average volume. And 3 specific stocks that would remain in focus because their weightages have come down, and that is JSW Steel, Shree Cement, and BPCL. And these stocks could see an outflow in the range of around 35 to 73 million US dollars, which is nearly 3 to 5 times that 20-day average volume.
Right, thanks for that, Somit. Let's quickly move on, though. Another counter which will be in focus will be SBI Cards. They had the management met up with analysts and a couple of positives and negatives to take away from that, and I'm going to quickly take you through that one. On the spends outlook, they're quite positive, with travel spends quite healthy. They are still seeing overseas spends yet to fully normalize. They expect, or they are seeing, some moderation with regard to both fuel, departmental store, grocery spends on the back of those 2,000 rupee note withdrawals by the RBI. The focus, they believe, remains on maintaining and improving the retail spends market share. So they continue to focus on that particular piece. Quickly moving on to some of the negatives, they believe that there is still some NIM compression to go. Q1 of FY24 will see NIM compression, with cost of funds rising by around 20 to 25 bips or so. They say that credit costs will stay elevated in Q1 again, with continued cleanup of vulnerable vintage accounts. That will continue to drag the Q1 FY24 numbers. With regard to competitive intensity, they believe that that's moderating, with cost to income also stabilizing around that 58-59% mark, and credit card integration with UPI should act as a further growth accelerator going forward. That's on SBI Card. That will be in focus as well. BofA giving it a target price of around 1,030, around 12% uptick from current market prices. That's broadly on SBI Card.
All right, then with that, we are completely out of time on this edition of Market Cafe. So Harsh and I will take your leave. Thank you so much for tuning in, but don't go anywhere. The market will take the action forward.